Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hey, Colorado, welcome back to Reverse Mortgage Radio, where I help older homeowners and their families make smarter decisions with confidence and clarity. I'm your host, Bruce Simmons, and today's episode is all about a game changer that most retirees don't even know exists. The reverse mortgage for purchase, or what we call reverse for purchase. Whether you have $10,000 in the bank or $1 million in assets, this strategy can create flexibility, boost your lifestyle, and offer long-term security. Now, if you're a regular listener to the show, you might be thinking, hey, wait a minute, Bruce. You talked about this just, 4 months ago? Well, I did. In that episode, I talked more about the nuts and bolts of how the program works. Today, I want to dive into the top 5 reasons why every senior buying a new home absolutely needs to have the reverse mortgage option on their radar. So let's jump into it. What I want to do is I'm going to go through the options really quickly so you can get an idea what the show is going to contain. Then we're going to dive into each one a little more in detail. So number 1, keep more cash in your pocket. If you can use a reverse mortgage for purchase, you're going to keep more cash from the sale of your previous home in your pocket. So just imagine selling your home and buying your dream retirement home. But instead of putting all your cash into it or taking out a new mortgage with a new mortgage payment that you're going to have for the rest of your life, you put down around 55, 60, 65% of the value, and you never, ever have to make a mortgage payment again. The rest of the proceeds from the sale of your old home stays liquid. You can invest it. You can gift it to family, keep it for emergency fund, or even take that bucket list trip. Why tie up all the profit you made from your old home when you can have it work for you? Reason number 2 now, eliminate your mortgage payments. For most retirees, a fixed income is just a reality. Even if you've got $500,000 or $600,000 or $800,000 or even $1 million, you don't want to just spend all that money willy-nilly. You have to budget. And so most retirees have some kind of a fixed income that they're living on. Reverse for purchase allows you to buy a home with no required principal and interest payment, ever, as long as you live in the home. We call it a payment optional program because you can make payments, but you're not required to, while still retaining ownership and control of your house. Okay, so all that is still your house. You could still paint it purple. You can add a bedroom. You can sell it anytime you want. It's your house. Of course, you have to pay the property taxes and insurance and maintain the home and live there as your primary residence and keep your name on title. But even if you can afford to make a payment, supposedly, why make one when you don't have to, right? Strategic money use is about efficiency, not just ability. Reason number 3, you can right-size your home without downsizing your lifestyle. We've all seen people downsize their home into something they don't really want. You feel like you're stuck. You have to get this because you don't want a mortgage payment. Or you can only afford an $800 principal and interest mortgage payment, whatever the case may be. But just because you think you can't afford more doesn't mean you can't. Because with a reverse for purchase, you could possibly right-size your home into a home that fits your lifestyle without settling for less. In other words, let's say you're living in an older home and it's too big, you move into a smaller home, so you're downsizing, but you can actually upgrade your lifestyle if it's a brand new home with all the modern features and everything. This is a great program to be able to move into one level, a smaller place. It's easier to maintain. The 4th reason that this is such a great program is you build in long-term aging strategy. Moving once in retirement is ideal, but only if it's into a home that you can age comfortably. A reverse for purchase lets you afford the features like a main level bedroom or walk-in tubs or a safer layout, like with ramps or things of that nature, without draining all of your savings. Plus, because the loan is what's called non-recourse, it's government insured, and we'll delve into that in a little bit. But your heirs will never owe more on the home than it's actually worth, even decades down the line. So if you're 65 and you say, I'm planning for this home because I'm going to live here till I'm 90, 25 years later now, the interest accumulates on the balance. But even if, it's unlikely, but if you end up owing more on the house than it's actually worth, your heirs are not going to get stuck on it because there's protections built into this plan. So that's 4. The 5th reason that reverse mortgage is such a great program that needs to be considered by everybody is it should be used as a strategic financial planning tool. I say over and over, this is not a loan for desperate people. Desperate people do use it sometimes, but you can get so much more out of it if you use it as a strategic planning tool. The reverse for purchase provides flexibility. You can use the proceeds that you didn't tie up into the new house to invest for long-term returns. You could delay Social Security and increase benefits. I've had people do that before. Set up emergency fund. That's probably one of the most common things. People like having finances set aside that you can tap into for emergencies or pay off other high-interest debts too. It's a tool, not a bailout. It's perfect for people who want options in retirement. That's what I love about this program. It's for options. And you can get the house you really want without having to tap into other assets with a reverse for purchase. It just makes complete sense. So those are the top 5 reasons for considering a reverse mortgage for purchase. Everybody, I think personally, should consider a reverse for purchase if you're going to move when you're older and you're in your retirement years, because that's what I plan to do. When I'm old enough, I definitely am going to be using a reverse for purchase. It's part of my financial plan. My wife knows it. My financial advisor knows it. I haven't talked to the kids about it, but it's not their decision, right? So now, what I want to do before we go getting into more details about this, I want to break each one of these down a little further. But let's talk about a few nuts and bolts, because a reverse mortgage is most of the time an FHA insured loan, and it's specifically designed for people who are 62 and over. It allows you to convert a portion of the value of your home into cash that you can use however you want. In this case, in this episode today, we're talking about using the money from the sale of your home, combining it with a reverse mortgage on the new home. That's the way a reverse for purchase works. But a lot of people, most people actually use it to stay in their own home. And if that's your situation and you want to stay there, you're in a perfect house, go for it. However, one thing that I do hear people say sometimes is they say, well, what am I going to get for that's better than this house? And that might be the case, but it might not. You're thinking inside the box because you're not considering a reverse mortgage on a newer home. Then maybe, let's say you've got $400,000 in equity. You're thinking, well, I could sell this place and what am I going to get for $400,000? Or if I buy a $600,000 home, then I've got a mortgage payment that I don't want to have for the rest of my life on a $200,000 loan. Well, remember reverse mortgages. On a new $600,000 home that would be better than the house that you're living in now, maybe not, but then you can use that reverse mortgage on the new home. You're not creating income or paying off an existing mortgage. You're using it to help you buy this more expensive home. You sell your house, you cash out with $400,000. You take that $400,000 and put it down on a new home, a new $600,000 home. And then the reverse mortgage provides the other $200,000. I'm just using that as a simple number. Okay, it might be more, it might be less. Maybe you could buy a $600,000 home and only put $300,000 down, depending upon your age and interest rates and things. And in that case, you can get this nicer home and keep money in your pocket from the sale of your old home, like we talked about in some of these scenarios. Okay, if you have any questions about the reverse for purchase or about reverse mortgages at all, please call me. My name is Bruce Simmons. I'm the reverse mortgage manager of American Liberty Mortgage. We're a local Denver-based mortgage banker, and I've been specializing in reverse mortgages for 22 years now. Since 2003 is when I started specializing in it. And I think it's a fantastic program. This reverse for purchase came about in 2009. I remember I've been teaching continuing education classes to real estate professionals ever since it started in 2009. It's just a fantastic program. But you can reach me if you have any questions at 303-467-7821. 303-467-7821 is my direct line. You can also visit me online at reversemortgageradio.net. Reversemortgageradio.net is my website. You can go there and see how much you can qualify for on your home for a reverse mortgage. You can download my free consumer guide that I have there as well, too. But feel free to give me a call. I'd love to just talk with you about your specific situation, whether you want to sell, whether you want to age in place where you're at now. If you know somebody that could benefit from this and you want to help them gather information, I do that for people all the time as well. All right, let's dive into these in a little more detail now. Number one, keep more cash in your pocket. What we mean by that is from the sale of your old home. And that's what I just mentioned. So, for example, you sell your old home, you get $400,000. And let's say you found a new $500,000 home that's perfect for you. You love it. Everything's on one level. The laundry is on the main level. There might be a basement, might not. The yard is small enough that you could take care of it. Or it's a townhome or a condo that you can live in without any maintenance, which is perfect for most people as you age. But you buy this $500,000 home, and let's say we could loan you 35%. So we could loan you $175,000 on a $500,000 home. You've got $400,000 from the sale of your old home, but you're going to use $175,000 from the reverse mortgage. So that's going to leave $75,000 in your pocket from the sale of your old house that you could keep. You can keep it in savings, keep it as an emergency fund, whatever the case may be, because you only had to bring $325,000 to the sale because the reverse mortgage covered the other $175,000 of the $500,000 purchase price. Now, I don't want to go getting all wonky into numbers with you here, but if you can imagine that, you buy a $500,000 home, you only have to put down $325,000. And you have no mortgage payment for as long as you live in the home. Now, I say no mortgage payment, but you still have to pay your own property taxes, your homeowners insurance. You have to maintain the home. Obviously, if it's a condo, then you don't have to worry about that, or a townhome. But you also have to live there as your primary residence and keep your name on title. You do those 5 things, the loan will never be called due. You can live there until your 150th birthday. That's when the loan technically comes due, on the youngest homeowner's 150th birthday. So if you live in the home for longer than that, well, you might want to call customer service and say, hey, look, it's my 150th birthday. I ain't moving. The odds are that's not going to happen, but it doesn't matter if it does or not, because you're going to be there. All right. I think they'd celebrate you. They would say, okay, we're going to forgive this debt or something. No guarantees, but who knows? So but the nice thing is you can stay there without a mortgage payment. There's no mortgage payment required. If you come into some money and you want to pay it down, you certainly can. But imagine the luxury of not having to make a mortgage payment every month and knowing that you still have an extra $75,000 in the bank in that scenario. And if you've got more money for a down payment and you want to buy a more expensive home, the same rule applies. Feel free to call me. I'd be happy to work up numbers for you. I'm just talking numbers off the top of my head here. Your situation will be different. Okay. Eliminate mortgage payments. Well, that's just what we were talking about. So many people, I think roughly between 80 and 90% of the customers that I work with have an existing mortgage or a home equity line of credit, some kind of lien against their home that they're making payments on. And what kills me is people say, oh, reverse mortgages are risky. Well, what's more risky? Having a mortgage that you have to make a monthly payment on, and if you fail to make that payment 1 month, you're going to start receiving dunning calls, people calling you saying, hey, where's our money? We have to have you pay. And if you don't pay, they could start foreclosure on you. Or a loan like a reverse mortgage that does not require a monthly mortgage payment. Like I said, you have to pay your property taxes and insurance. And if you do not do that, you're going to get calls on that too. But you know what? You could own your home free and clear. And if you don't pay your property taxes, you're going to lose your house regardless. So you always got to pay the man, right? But the nice thing is you don't have a mortgage payment. You could get the home you really want. Like I said, if you had that $400,000 in hand and you're like, no, I'm stuck settling for a $400,000 home when I really want this $500,000 or $600,000 home, well, you could get it with a reverse mortgage and not have a mortgage payment. That's critical. That's the reason why most people get a reverse mortgage, is that having that flexibility of not being required to make a payment. All right. Number 3, right-size the home without downsizing your lifestyle. Okay. So that's where, like I say, you can get the home you really want. Whether it's one level, whether you're moving to a more expensive area, and you want to upgrade because the house is more expensive. Maybe you're not upgrading, but the housing market is just more expensive. For example, I did a loan for some people from Lincoln, Nebraska. They sold their home and they cashed out with $400,000 to $425,000. They moved to Loveland and they wanted to buy a $600,000 or $625,000 home. I don't remember exactly. We were able to do that for them, get them into their home, and they kept some cash from the sale of their old home too. They got a better home. I don't know if it was better than what they had in Lincoln, Nebraska, but they got into the home they wanted, near family. They were moving out here to be near their kids and grandkids, and they were helping their kids by being able to care for the grandkids from time to time, things of that nature. Just being closer to family improves the lifestyle. You live longer, a better, healthier life if you can be near family. There's just studies have proven that. But basically being able to improve your lifestyle, whether it's being near family or being near other services, or maybe it's being near other seniors if you move into a 55 plus community or a 65 plus community. Maybe it's like Windsor Gardens, where everybody there is, in their 60s, 70s, and 80s, and it's condos. But Windsor Gardens is a great place for a lot of people because there's so many services, and that improves your lifestyle. That improves your standard of living, being able to do that. So you can have all of that stuff and still possibly have extra money left over and definitely not have a mortgage payment. Okay. The other thing too is number 4, build in long-term aging strategy. And like I said, that's kind of like if you move into Windsor Gardens, that's the perfect place to age for as long as you live, as long as you can live independently. That's a perfect place for some people. Other people, there's no way I'm ever going to want to live in a place like that. I want to be around young people, around my family, or whatever the case may be. And whatever works for you is the key thing that we want to focus on with the reverse mortgage for purchase. Whether that's moving up to the mountains. I did a loan for some people that were in their 70s, and they'd always wanted to live in the mountains. They sold their home in Denver. They had a condo in Denver. They got out of Denver, and they moved to a little rural town, Ridgway, Colorado. And they bought a nice home on a good-sized lot out there. Now, they only lived there for about 4 years before they had to move back to Denver. But that was their dream. And they said it was well worth every penny that they didn't pay on a mortgage payment, but they were still charged interest. See, I forgot to mention that when I was explaining how the program worked. You're still charged interest on reverse mortgages. You just don't have to pay it. You can pay it if you want, but you're not required to. That interest that you're charged gets added to the loan balance. You put down $500,000 on a $800,000 house, for example, and you're going to be charged interest on that $300,000 you're taking out from the reverse mortgage to make up the difference. You've got $500,000 in equity when you start. Now, your loan balance might grow from $300,000 to $400,000 or even $500,000, depending on how long you live in the home. The thing people forget, I talked to somebody this week, a customer of mine that I did a loan for back in 2020, because he had his loan 5 years, and I reached out to him and we talked about that, and he was worried about how the interest is growing over time. And I said, remember, we talked about this? He's like, yeah, I know, but remind me, because it's easy to forget. There's a lot of numbers that we go over with reverse mortgages. And I explained to him how the loan balance grows, and he knew that. But then I reminded him the value of his home had grown by about $150,000 over that 5 years as well. And he wasn't factoring that into his mind. His loan balance had grown by 100,000 or not even that much. I think about 80,000, something like that. But the value of his home had grown by 150. I said, you've got more equity now, 5 years after having this loan and 5 years of no mortgage payments, than you did when we started the loan. And he's like, oh, okay, yeah, that makes sense. Because it's easy to look at that loan balance growing over time and freak out because you're like, well, I'm losing all this equity. No, you're not necessarily losing equity. You're still gaining equity. This guy gained equity in the 5 years since he's had the reverse mortgage. He lost about $80,000 in interest and mortgage insurance, but he gained $145 or something like that, because he said his home was worth around $520. I don't remember all the exact numbers, but he gained about $150,000. So you subtract the $80,000 in interest and mortgage insurance, and he still gained $70,000 in equity. So he's better off now. Plus, he's kept 5 years of $1,000 in principal and interest that he didn't have to pay, because we paid off a big mortgage for him that was about $1,000 a month. So that alone was $30,000 right there for over 5 years. So these are factors that all go into the evaluation process when you're deciding whether a reverse mortgage makes sense. And I know I'm throwing a bunch of numbers out at you. Don't get overwhelmed with the numbers. I tend to do that sometimes, even though I'm really not a numbers person. I was not very good at math in high school, and I never went to college. So, but I've been working with these numbers for 22 years, so that's why I know them so well. Okay, so the first four that we're talking about, remember, there's reason number one, keep more cash in your pocket. Reason number two, eliminate monthly mortgage payments, required monthly mortgage payments. Reason number three, you can right-size your home without downsizing your lifestyle. Reason number four, build long-term aging strategy. Get the home that's right for you. If you need a walk-in tub, you can find a house with these features in it. Or let's say you have that extra money. You've got $75,000 or $100,000 left over from the sale of your home. You move into a home, maybe it's not 100% perfect for you at this time, but you've got this extra money that now you can pay to get a walk-in tub, or you get handrails in the bathroom, or you can do different things to make it right. Put a ramp, if need be, on the front porch, things of that nature. Because you've got this extra money, you can make it perfect for you. And number five, strategic planning, financial planning tool. Okay? Because the goal with reverse mortgages is really to improve your lifestyle without causing stress. I always tell people reverse mortgages are supposed to relieve financial stress, not create it. And again, this goes back to what I was just talking about. If looking at that monthly statement and seeing that loan balance get bigger and bigger and bigger is going to cause you more stress than the benefit of getting in the right house and aging in the right house properly, you probably should not you definitely should not do the reverse mortgage, because your loan balance does grow. However, keep this in mind. Don't forget you're in the perfect house. You no longer have stairs. You no longer have this big yard to take care of. Or now maybe you've got extra money and you can afford to pay somebody to come in once a month or once a week or whatever to clean for you, to help you out with things like that. And you've got the ramp or the walk-in tub or whatever it is you need as you age. So even though that loan balance is growing over time, and even if, let's say, the value of the home did not go up, which is possible, the market's slowing at this point. If all those factors came to be and you're actually losing equity because the value of your home is not going up, but your loan balance is, but you've got the perfect lifestyle now. You're in a home close to family. You're all on one level, so there's no stairs. You can afford to pay somebody to come in to clean. You don't have a yard that you're going to be taken care of, or maybe it's a good size yard because you enjoy gardening, or now you're doing container gardening, or you've got money because you don't have a mortgage payment to travel. Now you can go to see America, or you buy an RV and you drive around for a couple months every year, whatever the case may be. All of these factors are things that you have to consider when you're looking at that loan balance getting larger, because again, that balance does grow over time. You want to keep that in mind, but don't forget about the benefits. It's easy sometimes when you're looking at this, or even just if you just left more money in investments. A lot of times people will look at that balance getting bigger and bigger, and they don't open up their statement from their financial advisor at the same time and see that, hey, I kept $200,000 that I didn't have to take from my retirement plan, or I added $200,000 to my retirement plan because I used the reverse mortgage to put $200,000 to finance $200,000 on my house. Things of that nature that people tend to overlook sometimes when they're factoring in the reverse mortgage negatives, because everything's got pros and cons. And a lot of people say, well, the reverse mortgage balance growing is just too much. I can't take it. And if that's the case, then you shouldn't do the reverse mortgage. But you don't want to just focus on that exclusively without looking at the benefits too. Everything has the pros and cons. If you just focus on the pros, that's not good. But also you don't want to just focus on the cons, because I personally believe this is a fantastic product. Everybody should consider it. Everybody that qualifies for it should consider it. And even if you don't qualify, you don't have enough equity in your home, I always tell people, okay, I can't qualify you now. You can't get the loan now, but that doesn't mean you can't get it a year, 2 years, 5 years down the road, depending on home values, interest rates, and things of that nature. Anyways, hopefully this helps you with deciding that maybe a reverse mortgage is something I should look at. If you do feel that way, please call me. My name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage in Denver. My direct line is 303-467-7821. 303-467-7821 is my direct line. You can visit me online as well at reversemortgageradio.net. Go there and download my free consumer guide. Get a free quote, whatever the case may be. Either way, I hope you have a fantastic day. Thanks so much for joining me.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA. NMLS number 409914. American Liberty Mortgage is an equal housing lender.